Good morning, everyone. This is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, November 18th, 2024. So we'll go through the economic data from last week, which was heavy on inflation news. Then we'll talk about returns from last week and then preview this week's economic activity that will be released. So last week, again, inflation was a focus. Tuesday, CPI, core CPI. The numbers came out exactly as expected. Core inflation or core CPI up 0.2% month over month for October, same as expected. The headline number up 0.2% month over month as expected. Because of rounding, a little bit of improvement though on the inflation rate year over year. Again, the headline number expectation was 2.6% annual. It came in at 2.4%. But again, very much as expected. On Thursday, we had PPI, core PPI, same story. Both came in as exactly as expected for PPI, Producer Price Index, for the month of October, up 0.2% month over month, exactly as expected. Core PPI up 0.3% month over month, as expected. Also on Thursday, initial jobless claims came in better than expected. Remember, just a few weeks ago, we were spiking up towards 250,000 for the week, and now we have come right back down. So last week, 217,000. Expectation was 223,000. Last economic activity reported last week of note, retail sales ex-auto. Retail sales month over month, month of October, better than expected, 0.4%. Expectation was positive 0.3%. But the strength came from auto. So if you look ex-auto, the expectation was retail sales for October to be up 0.3%. That actually only came in at 0.1%. So interpolating, but strong month for autos, but overall good month for retail sales. As a result of last week's economic data, the Atlanta Federal Reserve did not change their expectation for fourth quarter GDP growth. Coming into the week, they were at 2.5%. We left the week at the same, 2.5%. Inflation expectations hardly moved last week. We're stabilizing here around 2.3%. And in fact, last week it ended the week at 2.33% for the average expected for the next 10 years. One thing that did change last week, and we'll talk about some of the dislocation in the U.S. equity market and fixed income as well, but the Fed funds expectation in terms of a decrease month of December, there's still an expectation that we'll get one rate cut, but that dropped to 58%. It was 65% the week before. But it was pretty clear a lot of bond market investors were expecting somehow a higher, with a greater expectation for rate cuts, including in early next week, that maybe look like we may not be getting them quite as quickly as expected. So, returns last week, not a good week. Now, I will preface this by saying prior week was really strong. So, I'll just mention that since the election, which happened a week ago, Tuesday, 2 weeks ago, Tuesday, the S&P 500 is still up 1.5%. But last week, S&P 500 gave up 2.1%. It was a tough week. And in particular, growth here in the U.S. got hit. So growth was down 2.9%. Value held in well, less than down 1%. For the international markets, the MSCI World ex-US down 2.4%. But what really got hit? China. So China was down 6% last week after admittedly a strong run, but emerging markets in total down 4.5% last week. Also, fixed income hurting. So bond yields continue to rise. We know the Fed will likely cut again on the short end, but the intermediate term yields, those have been rising, rose again last week. So the 10-year up another 13 basis points. So year to date, the 10-year has risen 56 basis points. So we often notice just the difference between the Bloomberg U.S. Aggregate Bond Index and the long government bond index. So year to date, the Bloomberg U.S. Aggregate Bond Index up 1.3%. However, the U.S. long government down almost 4.8%. Let's quickly take a look at some of the economic activity this week. It is a very light calendar, thankfully. Housing is a big focus, but this really has not moved the market in some time. But building permits expected, it'll be released on Tuesday, as is housing starts. So the prior building permits expected to be up 5,000 from the month of September. In the month of October, housing starts expected to be slightly down from what we saw in September. On Thursday, we'll get existing home sales. So that's actually expected to be up, let's just call it flat. And then initial jobless claims are expected to be up a little bit from last week. It was surprisingly low last week at 217. Expectation is it'll come in at 223,000. Last metric for the week will be the Michigan Consumer Sentiment Index. For the month of October, that was slightly better than expected at that point, up to 70.5. Expected to see a pretty sizable increase for the month of November. The consensus expectation, 73.5. So that's it. Brief week. Thank you very much for attending. We appreciate it, and we'll look forward to seeing you next week. Thank you.